Welcome back to Teshkid Effects for another quant price prediction update, and in this video I'll be giving you the short-term and the long-term scenarios that I expect to play out, basing my analysis on the Elliot structures and the Fibonacci's. And allow me to kickstart the video here on the daily chart by giving you a brief of what has been happening here on the quant chart. Quant from the all-time high had been seeing lower prices in this massive ABC corrective structure, which took us back to around the $40.1 mark, and after seeing that low we started seeing a very nice bounce to the upside, which had been obeying the Elliot structures, and that is better seen here on the forward chart, where you can see have this Elliot structure in blue, which is a fractal wave completing the formation of that higher Elliot wave count 1 to the upside. And in that movement to the upside we made our high at around the $229 mark, and after making that high, whatever we expect to see next is a bit of a corrective structure to the lower side in the formation of a higher Elliot wave count 2, and I believe that is what is playing out here on the quant chart. And first giving you a minimum retracement area to the lower side in the formation of that second wave using the Fibonacci's, connecting them from the low of that first wave down there to the high of that wave 1. The minimum retracement area to the lower side in the formation of that second wave should be between the fib level 0.5 and the fib level 0.618, which is a target area that we have fully maximized, but we are still holding above the fib level 0.78 after losing the fib level 0.618. And here on the forward chart we have a chart pattern that is in formation, which is a trend continuation pattern, which is a bear flag, and because of that I'm expecting a bit of a breakout to the lower side, giving us a new low in the formation of that higher Elliot wave count to the lower side. And after seeing the breakout out of the bear flag that we have right here, you can see we lost the key area of support at around the $110.9 mark, and after losing that key area of support we even saw a retest of the key area of support. This was the breakout, then we saw the retest, and after the retest was in we continued pushing even lower, making our low at around the $102.5 mark, and getting back to the formation of this second wave, which is a corrective wave. And because of that we expect an ABC corrective structure. I have an ABC corrective structure here on this chart where we can term this as a wave A to the lower side, then we saw that wave B, and whatever we are seeing right here might be that movement to the lower side in the formation of that wave C, which should give us a low in the formation of that higher Elliot wave count 2 to the lower side, and sketching out a minimum target area to the lower side in the formation of this wave C using the trend based Fibonacci, connecting it from the high of that wave 1, that is that wave A, to the low of the wave A, then dragging the fibs to the high of that wave B. That gives me a minimum target area to the lower side in the formation of that wave C at the fib level 1.618, and that is at around the $81.3 mark, meaning we still have one leg down for us to complete the formation of this higher Elliot wave count 2. Then from there we can expect an impulsive movement to the upside in the formation of that higher Elliot wave count 3, having the wave 5 of that fractal wave completing the formation of that wave 3 to the upside. And getting back to the 1 hour chart for further analysis and also give you the chart patterns that you have information here on the 1 hour chart to support that movement, giving us a new low in the formation of that wave 2. We have a head and shoulders pattern which is right here in formation, which has now started to give us a breakout to the lower side, and this is a chart pattern that normally breaks to the lower side, having the minimum target area of the breakout as the height between the head and the neckline, and we can get that height and then place it below the neckline, giving us a minimum target area back to around the $91.5 mark, and that means there are chances of losing the key area of support at around the $100.3 mark. So let's be patient and see how that plays out. But we also have another chart pattern that is giving us a bit of a short-term bullish movement here on the quant chart, and if I draw it out, I can first connect these bottoms that we made right here like that, and once I connect them then I can draw out my chart pattern, because that chart pattern is a double bottom, and if I draw it out I can have that as the first bottom to the lower side. Then we have seen the formation of the neckline, we have also seen the formation of that other bottom, and very soon I'm expecting quant to continue pushing higher, given that we have managed to break above the 20-day MA and it's now acting as support. Continue pushing even higher, get back to the neckline, and then from there we can expect a breakout to the upper side, and the minimum target area of the breakout can be given by the height between the neckline and the bottoms. So we can get that height and then place it above the neckline, and that gives me a minimum target area back to around the $116.9 mark. Then that means there are chances of getting a bit of a recovery here on the Quant chart, get back to around the $115 or maybe $116 mark. Then from there we can expect that impulsive movement to come to a completion in the formation of that wave C, and also complete the formation of that higher Elliott wave count to the lower side. So those are my short-term and the long-term scenarios that I'm expecting to play out here on the Quant chart. Also taking a look at the indicators here on the RSI, we are trading at around the 59 mark, meaning we have massive room for us to support any movements to the upper side. Also taking a look at the MACD, on the MACD we have been able to print a bullish cross, and that means higher prices are coming our way. So let's be patient and see how that plays out, and I'll keep you updated.